one of the things that economists have theorized for a long time is if you rain money down on people from helicopters, that it that people will not um, respect the money and they will just spend it freely. And when that happens, if you haven't increased goods, you get this thing called inflation. And oh, by the way, the rich get richer because they own all the stuff. Alrighty, folks, we've had five inflation readings exceed expectations. We've got CPI headline no longer going down, it is going up. I'm going to call it right now. Mortgage rates have to go over 7%. We're going to have this conversation with Dustin and Jonathan from Convoy Home Loans, who may disagree with me, but we're going to find out. How are you guys doing today?
Good, good. How are you?
I'm doing very well. I don't know if you guys saw it, but we got a hot CPI reading on Tuesday. We just got a hot PPI reading this morning, Thursday morning. And last I checked, rates were still below 7, but I don't think they stay below 7 very much longer, and could be above 7 by the end of the day or end of tomorrow. What do you guys think?
I think both of us have been saying this for the last 3 months that everybody's idea that we were heading into 2024 for significantly lower rates, has been a bit of a balancing act or a teeter-totter, if you will. And a lot of it was pointing towards what the inflation reports would be with CPI and then obviously PPI this morning. I think uh, if I read it correctly, PPI came in at double than
Yep,
expected, right?
correct.
So,
Yeah, month on month was expected to be 0.3, came in at 0.6. Yes, it was 100% double. Massive
and
upside beat.
yeah, that's inflation has been kind of the determining factor, if you will, that the Feds were looking at to give any sort of, inclination if rates were going to be cut
Yep.
sooner rather than later, or if they were going to stay here for longer, right? And
Yep.
I don't see any way that we would not in the short term at least see rates go up. And I think we're at like 6.8 on the average 30-year fix right now.
Something
Next
like
week, I
that.
think they'll be, a little bit over 7.
It just has to be. I mean, inflation is proving to be stickier the last mile. I don't, and again, I dig into the numbers, and CPI print was actually uglier and more problematic than the headline, because if you peel back CPI and look at CPI services, which the U.S. economy is mainly services, that is that is a not good number. That was like 5% or 5.5 or something. So inflation is proving hard to beat. The last mile is going to be hard, going to be sticky. There's no way the Fed can cut rates next week. Would you agree with that? There's a Fed meeting next week. No cut next week.
Yeah, absolutely not.
There's just no way, right? There's
Yeah,
just
but
no way.
it can't happen. I think it's actually if it does happen, it's actually not good.
I
Um,
agree. Yeah.
so the chance of it happening probably is close to zero, but it's nothing different than what we've been saying for the last, like Dustin
Yeah.
said, it's last year too. We said rates aren't gonna really jump or drop down as fast as people want it to be, and
Yeah. You guys have been right on the money there. Yeah. There's actually
yeah.
something we got to start talking about now. If we go back to earlier in the year, per your point, the smart money was calling for 6 rate cuts. I think at this point, we've got to seriously put on the table that there's 0 rate cuts all year. There's a chance that we have 0. What do you guys think of that?
I think there is I mean, obviously if that happens, right, then that means that we're basically almost at a standstill or in a little worse position than we are in right now, right?
Right.
In terms of
Correct.
PPI, all of that. So, the chances of that happening now are a lot higher than they were, I think, even at the beginning of the year, right?
Absolutely. Yeah.
So, because come when it was December turning January, we were still kind of teeter-tottering into the right direction, right?
Right.
And now we're starting to move into the opposite direction, which is interesting because technically things haven't changed much,
Mhm.
but everything is kind of changing for the worse. And this is kind of something we spoke about maybe 2 years ago. Like inflation, when they track this data, is a lagging number, right? It's always a month behind.
Yeah.
So I feel like because of that, the reactions are always a little delayed. And we're starting to see that happen because, January was good because December looked good. And
Right.
then February started looking a little rougher because January looked a little rougher. Now March is looking even rougher because February looked rougher. Like,
Right.
I think we're in that direction where it's going to start trending that way. And the Feds, I mean, they can't move rates like we talked about.
No. Well,
Yeah.
I think the most interesting question, and one that we didn't talk pre-roll, was there's a chance that the Fed actually has one more rate hike in them. And we're gonna that's the big thing next week. You guys may know this, but for the audience, they're going to release their dot plot next week. And one of the questions is going to be is how high rates go. So last time everybody said no more rate hikes. This time I have a sneaky suspicion we might see 3 or 4 people go, you know what? We may need to go up one more time. What do you guys think of that?
I think it's in play given the fact that no rate cuts are here, and the whole battle has been inflation, and they can see that from them stopping or pausing for this amount of time has caused inflation to go in the opposite direction or a
Yeah.
reverse path. I don't think all Fed chairs are gonna have that, but I wouldn't be surprised at all if 3 or 4, like you said, did.
Yeah. I think they almost have to protect their reputation. It's a
Yeah, I think
non-zero chance.
there.
Yeah.
It has to.
Wow.
I mean,
Wow.
everyone was thinking about cuts, right? We were supposed to get our first cut, like, and then
This
also
month.
a
Yeah,
cut.
this month
Yeah.
was supposed to be the
Yeah.
first cut. Yeah.
Yeah, it's supposed to be cut all the way through, and we're not seeing that happen. Um, it's going to be interesting to see how it reacts. I think the market already expects, like in terms of mortgage rates and
Mm,
whatnot, they already kind of expect that the cut isn't going to happen. I think that's baked in.
yeah, I think so.
I think even stocks, I feel like have it a little baked in. Like they're not gonna really expect a cut to happen. It's
Yeah.
always wishful thinking, right, going into these meetings. But
Mhm.
I really think that everyone already has it priced in. The only people that are hoping are those people on social media that are still calling for a rate cut to happen, right?
Yeah.
Because they can't be wrong, right? So
Yeah,
yeah.
exactly, exactly. Well, it is never boring, that is sure. But let's talk about it now. One thing I called for last week was for rates to stay at and around 7% all year. Looks like that might be coming to fruition, but if it does, what does that kind of do for people looking to maybe do a cash out refi or get seconds? What are their options if they need that capital? What are you guys seeing?
So I think maybe it's a two-part question in regards to what the market shakeout will be from having rates stay with where they're at, above 7. And for John and mine's business as well as Convoy's business, like we've been saying this a lot too, that we want just a normal,
Yes,
steady,
please.
non, roller coaster type market, because what happens is when we have the, kind of violent up and downs that we're seeing, it doesn't help us be able to guide our clients into which product might be best, but it also doesn't help for those loans that we get in process, because ultimately it's part of the game in the non-QM side. You might submit something where you were previously 2 weeks ago allowed to get 80%, let's say, loan to value on something,
Mhm.
and then market switches. Feds next week announced that on the dot plot there's a chance of one rate hike. Well, now all of a sudden that 80% loan to value option might be off the table. Okay, so that up and down roller coaster ping pong ride that we're playing isn't ideal for your average consumer buying their first time home, or even your investor. So what we're telling a lot of people right now to take advantage of is get a quick consultation from somebody like John or myself, see what the different options are there if you want to do the cash out, or
Mhm.
if you want to do a second position loan, or a HELOC. There's a lot of different, options to pull equity out right now, but nobody, in terms of with this rate environment, is refinancing
All right.
to get a lower rate. They're refinancing either out of hard money or to get cash out to do something else.
No, I think that's exactly the what I'm hoping for this year is the start of a normal housing market. To do that, we've got to have rates kind of steady, plus or minus a tenth on 7% would be great. And unfortunately, it's going to take years, right? One of the things that is obvious in my 54-year spreadsheet is it's going to take a long time to heal this broken housing market. So, people need to consult with professionals like yourself to see what the right option is for them, not only for purchase or equity extraction. But something else the three of us should be talking about is this California Dream for All. It was gone completely in like 7 business days last time. I hear there's an application process this time. What are you guys seeing? I hear it's coming. It's like it's scheduled, right?
Yeah, and we are getting a lot of inquiries regarding this. Yeah, I myself have
Didn't they
probably,
put in like 5 or 6
yeah,
last
I it's crazy. But I mean, obviously it's not a guaranteed thing, right? It's a lottery type system, but it's the income limits are a lot higher this time. Like I have clients in NorCal that the income limit is to qualify is like 277,000
Mm.
on the top end. So I think the qualification aspect, a lot more people are gonna apply
What was
because
it last time it was
it
like
was lower. It was like 100
one,
something.
yeah,
Yeah.
which
Yeah, it was pretty low. Yeah.
Yeah, but now it's like almost double. And on top of that, like I think it's 1,800 people that are selected this time, up to 180,000, and that's 20% down on,
Yeah.
up to 20% down. And um the what's interesting is this is obviously like we spoke about at the same time before, right? This is California's ploy to try to drive up, I think, prices again, right? This is gonna I'm always
It's certainly
my
it's going to drive up demand, and demand when there's limited supply probably means prices go up. Yes.
correct. Yeah, yeah. So it's I think it makes affordability worse. And I think this is my little government, thing, but it's like I feel like they're trying to make it harder and harder for people to own real estate, right?
Well, yeah, I mean, so California Dream for All, if people don't recall, this is what I remember from it. Basically, the government, California, puts 20% down and gets 20% ownership in the property, which they capture when you sell or refi them out. That's kind
Correct.
of the deal, right?
Yeah.
And it's a no interest loan, so they're bringing 20% in, 0%, right? They just get they're basically buying a secured position. Of course, everybody's going to apply for that. It's like free money.
Yeah.
Haven't we learned anything that free money rained down from helicopters creates bad behavior and stupid activities? It's crazy. And then if you just want to keep ripping on the government, which why not? I'm here for it. We have the president of the United States talking about giving everybody $400 a month for 2 years to help with interest rates. At least that was what I heard. Did you guys hear this in the State of the Union? What crazy nonsense is this?
Yeah, you know what's crazy is I don't know if everyone probably remembers, but Andrew Yang was kind of talking about that when he was running
Hmm,
for presidency, like
I
last time
missed
around.
that. Okay.
Yeah, he was like we need to give everyone a universal payment something.
Hmm.
And obviously, as we know, if you do that, right, if you keep rewarding people for not working, then people will not work, and it won't actually help the economy whatsoever.
Well, I think so one of the things that economists have theorized for a long time is if you rain money down on people from helicopters, that it that people will not um, respect the money and they will just spend it freely. And when that happens, if you haven't increased goods, you get this thing called inflation. And oh, by the way, the rich get richer because they own all the stuff. And I think the pandemic has proven that when you print $9 trillion and you give it away for nothing, you get inflation. So pretty wild. I wish the government would worry more about supply than demand. To that point, I do want to give Biden credit. He did talk about a $10,000 tax credit for owners to sell and quote unquote trade up. That is at least an interesting idea to me. I don't know that 10,000 is enough to do anything, but at least he tried to create supply. The first $400, that is all demand, and that only leads to higher prices. The $10,000 trade up thing, I thought that was interesting at least.
Yeah, I mean, if you're living in anywhere other than California, right? I
Yeah,
mean, yeah, I mean, $10,000 in Ohio can take you a little bit of a further way than it can in
sure.
California. Yeah,
Yeah, yeah. Not in Orange County. That's not
exactly.
gonna help.
Yeah.
Not gonna help. Dustin, so what do you see going on? I did see mortgage apps were up the last 2 weeks. They were up 12% last week, 5% this week. Rates matter, I guess, huh? 6, 8. People come out and get more demand.
Yeah, and it's always like we were alluding to maybe 5, 10 minutes ago, with regards to inflation reports. It's also consumers are always lagged in regards to where rates are versus
Yeah,
where they were 2 weeks ago. So we'll see a lot of influx in applications, flow in thinking that rates that they saw 2 weeks ago are where they're at today. And
yeah.
I've been uh, it's not a sad story. He's a friend slash client of mine that we've been going back and forth for about, I want to say, almost a month and a half right now.
Mm.
And he's just trying to get it down. And every morning he'll text me being like, come on, give it to me. Like, I know you can do it. I'm like, I can't negotiate. And I tell this to him every morning.
I can't
You can't
negotiate.
negotiate with me on the rate because I'm giving you what the market is giving you. Okay. This
Yeah,
isn't, I'm not selling you, my car and I'm trying to make a deal here. This
yeah,
is me telling you where it's at. And unfortunately, there is a lot of clickbait and a lot of
yep,
comments on social media that are telling people that rates are dropping and we're at 6% and all of that. And it will spur applications to come in, but once they actually realize that today, March 14th, that's not where
yeah,
rates are, is
yeah.
the crux of the conversations. But one thing when you were bringing up Biden that I got a little scared about was I think it was like 2 months ago when they proposed, or Biden proposed in his bill to get rid of 1031s. I think
Oh
it's
yeah.
going to be part of it again on his new proposed bill, which I think obviously a lot of real estate investors aren't going to like, but I wanted to know, I was going to ask you what your opinion on Biden's ability to do that would be.
So I think there's a couple of things. I think the chances that the 1031 go away entirely are zero. I do think if they coached it, because really what Biden is going after is the big guys, right? There are people worth a lot of money that their whole existence is to 1031 until they die.
Yeah.
So I could see them putting some kind of cap on it, like, hey, you can't 1031 anything over 5 million bucks. I'm just making up that number. I think that might be something that could get through Congress. But if you just do it carte blanche, Congress owns a lot of real estate. I mean, I don't know if you guys know this, but if you looked at the balance sheet of our senators and congressmen, a lot of them own real estate. And historically speaking, they're not about to do things that hurt them. So I think if you change the lens to 1031 for big guys, that might get through. But I don't know if Congress is smart enough to put that together. So, but I don't think there's any chance it goes away. They've tried to kill it 15 times.
I mean, that bill is that we talked about last week is, that's a proving point of what we were kind of talking
Oh,
about
with
too.
the
The whole,
amount of property.
yeah, amount of properties you own, you get a tax no matter what. Like that bill is, a real bill on the floor. So,
Yep.
it's not, none of this is out of the question,
No, of
even if
course
it's
not.
not
No,
targeted to big guys. Yeah.
no, real estate is clearly in the lens of the current administration. They want to make it. They don't want to. They do not want to see Wall Street own real estate, single family homes specifically, and they're going to do what they can to make that the talk track. So we'll see. Yep.
Good.
Guys, if somebody wanted to reach out to you and get a bid, a quote on what's what for their situation, talk about equity extraction if that is something they're looking at. Talk about California Dream for All if you want to help them with that. What should they do?
Go to convoyhomeloans.com and let us know you came from ORaaT.
Folks, tell them you came from ORaaT. Otherwise, you end up in the queue. If you tell them you came from ORaaT, you get one of these two fine gentlemen. Thanks, guys.
Thank
Thank
you.
you.